Guys, we're going to be looking again here at your um, some of your solutions for your concept questions, and then review questions in just a minute, kind of related to a topic of another standard report. And yes, depressing enough, there is another standard report. It's a figure 3.3 in your text, and that standard report belongs to public companies. Okay? And then we call those PCAOB standard reports. Okay, instead of the AICPA standard reports. So you see, you have significant difference between the two. Now, I don't. Once you understand this and keep this in mind, that there are two standard reports, but you really need to know the non-public company one because that one is tested very heavily as to what is on it. But then when they're testing you what is on the PCAOB report, the public accounting standard report, they're only testing on the differences from the other report. So we're going to just talk about those differences right now, just a little bit. Now, you'll see here that you have to include a discussion about critical audit matters, and we'll get into this a little bit more later. And you have to reference a report on an audit of internal controls. Be aware that if you're auditing a public company, you do what is referred to as an integrated audit, which means that you are also giving an opinion, a report, if you will, on the internal controls. Okay, so you have to kind of reference that in the standard report for public companies that you also did a report for internal controls as well. Now, the PCAOB auditing standards are the ones that are referred to instead of GAS, okay? And then the responsibility of management and responsibility of auditors to express that opinion, as that's not in a separate paragraph. That's just kind of in a statement that's a part of the opinion paragraph, kind of the basis for opinion paragraph. So they just make those statements that, you know, financial statements are responsibility of management, auditor's responsibility is to express an opinion. And so they just kind of leave it at that. They don't expound that at all. And what that does not do is change the auditor's liability for these particular statements. So that's what this, I think the AICPA is trying to do with their standard report, is to affect the ability for the auditors to have less liability on them in the courts. But we'll talk about that in chapter 5 a little bit more. So, but the most significant difference, guys, you'll see this here, is a discussion of critical audit matters. And, you know, what those are, we'll talk about too in a moment. But the PCAOB now requires disclosure of the tenure of the audit client relationship. And I want you to know that this is kind of a result of a very long discussion. And what happens is the government was very, very concerned about these cozy relationships that clients had with their audit firms. And though they might have had the same audit firm for the last 20 years, and how somehow that could be a threat to independence of the CPA. So what they did was they fought long and hard for us to have a rotation requirement with the government that said, hey, look, if you were a public company, you would have to change clients every 5 years. But they got a whole lot of pushback from both accountants and from the corporate and on doing that because a lot of times these bigger companies, once you take them on as an audit client, it takes a world of learning curve in order to actually get through 3 years of an audit and then start making money with that particular company. Like the first 2 or 3 years, you may be doing a whole lot of audit procedures just to figure out how the company's nature works. And you literally just have more on you to understand and get your head around when you're in the audit for the first year, second year, third year. And a lot of times it's not until that third year that the CPA firm will make any money on an audit. So if you got to turn around and then lose that client within 5 years, then they're going to have to, it's going to make audits go up, the price of audits. Now, Audits already went up a good bit. So back when there was a lot of fraud with early 20s here. And you just have to realize that a net result of all that debate was that they're requiring the public firms to state how long they've been doing the audit for a particular company. Okay? And this is their way of saying, hey, look, maybe the company needs to change if they've been too long with one company. But so far that hasn't had a lot of change on who you get to choose your auditor. Um, so anyway, that's the net result of that kind of a debate. So let me roll down here. There's another little bit of information about the differences between your standard reports. And I'm going to go down here to this. These standard reports here, the difference in them, both reports, remember, both begin with opinion paragraphs, right? The PCAOB. And remember, that was influence from the PCAOB that wanted to put opinions first, okay? And there's some reference in your chapter about how that's supposed to be more substantive, and I'm not sure about what that at all. But anyway, the point is putting the opinion first. Kind of, it's a little confusing because you need to talk about what you did before you give the opinion. But anyway, they've reversed that now. So both reports begin with an opinion, all right? And remember, the PCAOB report references the opinion of the internal control, and then the responsibilities for management auditors are in one section, right? And remember too that it's responsibility of management and the auditor to evaluate the conditions that rise from a substantial doubt about the entity's ability to continue as a going concern. So these responsibilities of both of them are mentioned in the standard public report. So just kind of pointing that out to you so you would get an idea of the differences in the two reports, and that's what's tested, remember. Now, I'd also want to take a few words here from this particular discussion about the critical audit matters. All right, and remember, the discussion of critical audit matters are intended to provide more information to users of financial statements in considerably high risk areas that the auditor may think are high risk. And one of the auditors, guys, requires a situation, an area, a certain department within a company, a high risk area, we have a tendency to have to apply a lot of significant auditor judgment to determine reasonableness of the recording of transactions from that area. So if we have to do that, then the new standard report new regulation requires us that we first identify, right, the critical audit matter. I put 1, 2, and 3 in here, guys, you see. We have to identify the critical audit matter. We have to describe the conditions that led to us identifying this area as a critical audit matter. And then we have to describe how the matter was addressed in the audit. So if we used alternate procedures or something in order to overcome a high significant risk area, then we just need to talk about it in professional language. And we need to include that in a paragraph in the standard report for public companies. They give an example down here, guys. It's really interesting of a critical audit matter. And that is, you have a large hotel and lodging chain. Imagine what it's like trying to determine revenue when at the end of the fiscal year, you have people who are staying in a room at a hotel. You got 600 different rooms at this hotel, and some of them are staying 2 nights, some of them staying 4 nights, some of them staying 5, some of them staying a whole week, right? And you're having to try to determine revenue for the end of the period. This takes an extensive amount of testing by the auditor. So if you had to do that for a particular number of properties, then you put in there an extensive amount of testing was done to determine the effectiveness of caloric matter, if you will. But primarily, guys, this 1, 2, and 3, where you identify, then you describe conditions, and then you describe how the matter was addressed. Remember, big stuff, going to be tested heavily here soon on the CPA exam and in this author's test bank as well. So just giving you a heads up on these big issues.